Welcome to the Deep Dive. We're the show that takes, well, a whole stack of information articles, research, maybe even your own notes, and boils it all down.
Yep, into the most important nuggets: knowledge, insight.
Exactly. Our mission today is pretty straightforward. Give you a shortcut to being genuinely clued in on KEC International's latest quarter.
We've got some surprising facts, maybe a little humor, keep you hooked.
So today we are really getting into the weeds on KEC International Ltd's Q1 FY26 financial results.
Yeah, we've gone through their investor presentation, the official financials, the press release, the whole lot.
Pulled out what really matters for you.
That's the plan.
Right. So the goal here is to unpack what these docs tell us about KEC. Performance, where they're headed strategically, their overall financial health.
Basically, what you need to know when you think about the bigger infrastructure picture.
For a company that's literally building the world's backbone, yeah. So let's dive in.
Let's do it.
Okay, let's unpack this. Before we hit the numbers hard, maybe we should just quickly set the stage. Who is KEC International?
Good idea. So they're a global infrastructure EPC major. Engineering, procurement, construction.
Builders, essentially.
Pretty much. And what's kind of fascinating is just how broad their reach is. Their portfolio is really diverse.
Right.
We're talking a major presence in power transmission distribution, that's T&D civil works, transportation, renewables, oil and gas pipelines, cables.
A long list.
It is. And their footprint. Over 110 countries. They do the big EPC projects, but they also supply key stuff like towers and cables globally.
It is impressive. And it clicks when you remember they're the flagship company of the RPG Group.
Which is a powerhouse in its own right.
Totally. RPG Group set up back in '79, turnover around, US $5.2 billion?
And their interests are super diverse, too. Infrastructure, yeah, but also tires, pharma, IT, specialty chemicals, even new tech ventures.
And get this, the RPG Group's history goes way back, like 1820 AD, banking, textiles, jute, tea.
Talk about a legacy.
Right. And KEC itself carries this legacy of 8 decades within that group.
Yeah, and the scale today is, well, remarkable. Over 7,500 employees for more than 40 nationalities.
Wow.
8 manufacturing facilities dotted around, and currently over 275 projects actually running. They are properly global.
And it seems like it's not just about the scale for them. They've got this purpose statement: we transform lives by building sustainable, world-class infrastructure.
Yeah, they push that quite a bit.
And their culture pillars back it up: execution excellence, happiness, interesting one, customer centricity, tech mindset, diversity, empowerment.
It paints a picture, doesn't it? A company trying to think beyond just, pouring concrete.
Definitely. Okay, so that gives us a good feel for KCO. Let's shift gears now. The numbers. Q1 FY26, quarter ended June 30th, 2025.
Right.
What's the headline? What jumped out at you first?
Okay, the main takeaway isn't just growth. It's really robust profitability growth.
Yeah.
Shows some serious operational leverage kicking in. So revenues first. They hit a 5,023 crore. That's up 11% year over year compared to about 4,512 crore last year.
11% top line, solid, especially now. But you said profitability really caught your eye.
Absolutely.
What levers do you think they pulled their operational efficiency?
It looks like it.
Yeah.
So EBITDA, earnings before interest, taxes, depreciation, amortization, they grew by a strong 19% year over year.
19%. Nice.
Yeah, reached R's 350 crore,
Yeah.
up from 294 crore. Now, there's a small caveat.
Okay.
The Q1 figure last year, the 294 crore, that included a one-off arbitration award of about R's 24 crore.
Ah, okay. So taking that out, this quarter's core operational performance looks even better.
Exactly. Makes the 19% growth seem even more impressive from core operations.
Right. And the bottom line, PBT, PD, must have seen big gains too.
Oh, yeah. Stellar gains. Profit before tax, PBT, jumped 42% year over year.
42%. Wow.
Yeah, up to R's 159 crore from 112 crore. And it's the same story for profit after tax, PTT. Also surged 42%, hitting R's and 25 crore from 88 crore.
Okay, that 42% growth, especially considering, external pressures, is that all organic, or were there any tax changes or one-offs helping that specific number?
Seems primarily organic based on the docs. It really speaks to how well they manage costs and converted that revenue growth into actual profit.
Okay, so connecting the dots, what does this mean for their margins? Must have improved quite a bit.
Precisely. Across the board improvement. EBITDA margin, that expanded by 50 basis points, or BPS, so 7.0% now, up from 6.5%.
Okay.
PBT margin, up 70 BPS to 3.2% from 2.5%. And PAT margin grew 60 BPs, landing at 2.5% from 1.9% last year.
Good expansion.
And another positive sign on cost control interest expenses as a slice of revenue actually dropped by 40 BPS, down to 3.0% from 3.4%.
Okay, interesting. Now, I noticed they presented results both consolidated and standalone. That distinction. Sometimes you find interesting nuggets there.
You definitely can.
So consolidated is everything, right? KC plus all the subsidiaries. Standalone is mostly the parent company's direct stuff.
That's right. And the standalone numbers for Q1 FY26 were revenues Rs 4,030 crore, PBT Rs 50 crore, and PBT Rs 37 crore.
Okay.
But there's a key structural change you need to know about for comparisons. As of January 1st, 2025, their cables business was moved.
Moved where?
Into its own wholly owned subsidiary, KEC Asian Cables Limited. Strategically done.
So Cable's financials aren't in the standalone figures anymore for this quarter?
Exactly. They're rolled up into consolidated, but not standalone. It affects direct year-on-year standalone comparisons in some ways.
Got it. Okay, so thinking about overall financial health.
Yeah.
What about debt? Did this strong profit performance help them trim the balance sheet?
Good question. How are they managing the balance sheet while growing?
Yeah.
So as of June 30, 2025, their net debt, and this includes acceptances, stood at Rs 5,348 crore.
Okay, up or down?
Down, and this is what's fascinating. It's a reduction of about Rs 250 crore compared to June 30th last year.
$250 million down.
While achieving 11% revenue growth over the last 12 months.
That is impressive. Growing revenue and cutting debt simultaneously, that's strong financial management.
It really speaks to their focus on deleveraging and efficiency.
So how are they managing the day-to-day cash flow? Working capital. That can be a real beast in big EPC projects.
It's always a challenge. Their net working capital, NWC, was at 128 days as of June 30th.
128 days. How does that compare?
It's up slightly, actually, from 122 days a year ago.
Okay. So a bit longer to convert work into cash.
Yeah, and while 128 days might seem high for some industries, for EPC, it's always a tightrope walk given the long project cycles. But they highlighted a bunch of initiatives they're running to optimize this.
Well, like what? What are they doing?
They mentioned judicious monitoring of cash flows through daily and weekly war rooms.
War rooms. Sounds intense. What does that actually mean in practice? How does a war room help NWC?
Yeah, it sounds dramatic. But basically, they're quick, focused meetings. Key people get together, identify specific bottlenecks holding up cash. Maybe a delayed payment, a project milestone stuck, and figure out how to fix it fast.
So real-time problem solving for cash flow.
Exactly.
Yeah.
Very agile. They're also focusing hard on, commercially closing out projects to get that retention money released.
The final payments.
Yep. And better commercial execution overall to rely less on waiting for receivables. Plus, being pickier about new orders, avoiding tenders with really bad payment terms up front.
Smart. A multi-pronged attack on working capital.
Seems like it's a comprehensive approach.
Okay, that makes sense. We've seen the big picture, the financials. Let's peel back the layers now, the individual segments.
Right.
Where's the engine room? Where are the maybe unexpected bumps?
Okay, well, no surprise. Transmission and distribution, T&D, is still the absolute powerhouse, really showing its core strength.
Still the biggest chunk.
By far. It brought in 63% of total revenues this quarter. That's actually up from 55% a year ago.
Wow, growing share too.
And the growth rate, robust. 26% year over year, hitting ours. 3,157 crore.
26% growth in their core segment.
Yeah. And they're clearly expecting more. They've started expanding capacity at their Butibori tower factory after already doing expansions in Dubai, Jaipur, and Jabalpur.
Signaling strong future demand then. Okay, T&D is firing, but what about civil? You want diversification, right? That segment was down 11%.
It was, yeah. That's a point to watch.
Should we be concerned? Is it a strategic issue or just a temporary blip?
Civil revenues were Rs 940 crore, down 11% year over year. The company's line is that it was hit by ongoing labor shortages, which we hear a lot about, and also some delayed payments on specific water projects.
Okay, execution issues rather than demand.
Seems that way for now, because on the flip side, their order inflow in civil was strong, over Rs 2,100 crore, mostly in buildings and factories.
So new work is coming in, they just need to execute and get paid on some older stuff.
That looks like the picture. Potential for growth is there once those bottlenecks ease.
Okay, and renewables. That's the hot sector globally. How did they do?
Big jump there. Really impressive. 87% growth.
87%.
Yeah, reached Rs 136 crore. Small base maybe, but strong momentum. They're running two big solar projects right now, Karnataka and Rajasthan.
Makes sense.
And they're actively bidding on more solar, wind, even battery storage projects, clearly aligned with the energy transition trend.
Good to see. How about cables and transportation?
Cables grew, but more modestly, 5% growth to ours, 383 crore.
Okay.
They've just commissioned a new aluminum conductor plant and are already planning to double its capacity. So investing there, plus spending on their e-beam facility and elastomeric cables is moving ahead.
Seems like strategic investment in cables and
No.
transportation.
Transportation revenues were pretty stable,
Yeah.
flat basically at ours, 471 crore.
Stable. Okay. Any highlights there?
Yeah, they're currently deploying KAVACH. That's the automatic train protection system.
KVACH. Sounds familiar, but remind me, what is it and why is it significant?
It's India's own homegrown automatic train protection system, vital for rail safety, preventing collisions.
Ah, right. Critical infrastructure.
Definitely. KEC is rolling it out across about 500 track kilometers right now.
Yeah.
And they feel they're well placed to get more orders for it.
So potential there.
Yeah, the focus seems to be on just getting these projects done faster and collecting the cash, improving that segment's cash flow.
Got it. Lastly, oil and gas pipelines. That saw a big drop, didn't it?
Huge drop, down 52%. Revenues were only R60 crore.
Ouch. What's the strategy there then? Are they pulling back?
Not pulling back, but shifting focus.
Yeah.
Their strategy now is heavily on the international market for pipelines.
Okay.
They just want a second international order, this one for a terminal station in Africa that's on top of another pipeline project they're already doing in Africa.
So looking abroad for opportunities, why?
It's a direct response, they say, to a really low tender pipeline in India for O&G and just fierce competition here.
Adaptability then.
Yeah.
If domestic is tough, look elsewhere.
Shows they can pivot, yeah.
Okay, connecting all this segment performance. What does the overall order book look like? That's our window into the future, right?
Absolutely. It gives you that revenue visibility. So year-to-date, first quarter, they pulled in ROS's 5,517 crore in new consolidated orders.
5.5 billion rupees in new work.
Mostly from...
Primarily from T&D and Civil, again reflecting where the strength and recent wins are.
Okay, so T&D and Civil driving new business. What's the quality or mix of those orders tell us?
Well, T&D grabbed 59% of that intake. Over RS, 3,200 crore in new orders there, spread across India, the Middle East, and the Americas. So geographically diverse, too.
Good breaks.
Civil contributed 38%, which is over RS's 2,100 crore, and notably, most of that was in buildings and factories.
Linking back to what you said about the real estate boom being a tailwind, they seem to be capturing that.
Exactly. It suggests they're well-positioned in key domestic growth segments.
Okay, that's the new intake. What about the total backlog, the whole pipeline of work they have lined up?
Their consolidated order book, the confirmed work, stands at RS 34,409 crore. 34,000 crore. Solid.
And there's more. They also have an L1 position, meaning they're the lowest bidder, very likely to win on projects worth over Rs 6,000 crore.
Okay, so add that potential L1 work.
And you get a combined order book plus L1 position of over Rs 40,000 crore.
40,000 crore, that's strong visibility for the next few quarters. Provides a solid foundation.
Definitely.
Is that pipeline mostly domestic work, or is it spread out internationally? Does that diversification help?
It's a pretty healthy mix, which absolutely helps mitigate regional risks. Looking at the year-to-date intake, 61% was domestic, 39% international.
Okay.
And the current total order book, 65% domestic, 35% international.
So a good balance, leveraging strong home demand, but also pushing into global markets. Makes sense strategically.
Yeah, it shows they're playing on both fronts.
So what's the view from the top? What's the leadership, Vimal Kejriwal, the MD and CEO, saying about all this?
Well, his commentary, as you'd expect, highlights the positives. He calls it a strong start to the year. Points to the healthy revenue growth, the big jump in profitability, and, importantly, the debt reduction.
Right.
And he emphasizes that even with those headwinds we talked about, the manpower shortages, geopolitical uncertainty, which are real drags, they still managed consistent, profitable revenue growth.
Highlighting that PBT and PAT growth over 40%.
Exactly. It's framed as a testament to their execution, even in tough conditions.
Sounds resilient.
Yeah.
So what's the general outlook they're painting? Are they banking on this momentum continuing?
The vibe is definitely optimistic across the main businesses. Mr. Kejriwal basically says, look, we're focused on execution. We've got this massive order book plus L1 over 40K crore. The tender pipeline looks good. So KC is well positioned to deliver sustained profitable growth in the coming quarters. That's the core message.
Okay, let's break down the specifics they mentioned. Tailwinds and headwinds. What's really pushing them forward?
All right, tailwinds. Number one, that robust T&D business, expected to keep driving good margins.
Especially with renewables boosting grid demand.
Exactly. Big opportunities from RE growth, plus advancements in things like digital substations, STATCOM, HVDC tech. And they see good T&D prospects internationally, too. Middle East, Africa, CIS, Americas.
Okay, what else?
The real estate boom domestically, plus what they call green shoots in private sector CapEx. That helps the civil side, especially buildings and factories.
Right.
They also expect civil execution to improve as those delayed payments and water projects start coming through.
Unblocking that bottleneck.
Hopefully. Then, cable strategy on track for growth and better margins. Government push on renewables overall, solar, wind, battery storage. Huge opportunity.
Makes sense.
Growing international chances in civil, transport, O&G too. And finally, while it's still tough, they say labor availability is trending slightly in the right direction. Improving.
Okay, a decent list of tailwinds. What about the flip side, the headwinds? What are the main obstacles still in their way?
Top of the list, those persistent manpower shortages. Still a major challenge, especially for getting projects done on time.
Yeah, that impacts execution directly.
Definitely. Then, geopolitical unrest. Tariff uncertainties that creates instability, particularly for international work.
Risks outside their control.
Largely, yes. And the transportation segment, as we discussed, is still a bit subdued. Margins and cash flow there are feeling the pinch from project delays.
And competition.
Yeah, the order book in transport is muted, partly because competition is fierce, especially from players who traditionally focused on roads moving into rail.
Interesting dynamic. Okay, so that covers the business outlook. Now, shifting gears slightly, beyond just the numbers, KEC talks a lot about sustainability, ESG.
They do. Environmental, social, governance, building sustainable world-class infrastructure.
Right. How does that translate into real actions? Is it just talk, or is it baked into how they operate? And how does it help the business?
That's the key question, isn't it? How does purpose translate to value? Okay, let's look at social. They measure a happiness quotient.
Seriously, happiness quotient.
Yeah, it reached 84% in FY25. Their target is 85% by FY26.
How does that help the bottom line, though?
Well, think about it. Happy employees usually mean higher productivity, less churn, better project execution. In a talent-heavy business like EPC, that's gold. They back it up with programs like Healthcare's 2.0 for well-being.
Okay, fair point. What about diversity? That's huge now.
Big focus.
Yeah.
They report a 57% increase in diversity and inclusion metrics in FY25 compared to FY21.
And the business case there?
In a global industry,
Yeah.
diverse teams often mean more innovation, better problem solving, adapting to different markets faster. That directly impacts winning and running projects worldwide. They've got initiatives like Bridge and even a specific app, We Care, for women working out on project sites.
That's quite specific, forward-thinking for the sector.
Seems like it.
And their CSR community stuff.
Reached over 1.5 million beneficiaries by FY25, they say. Things like training farmers in regenerative agriculture, providing clean cook stoves.
How does that connect?
Builds goodwill, strengthens community ties. That can actually make it easier to get project approvals, operate smoothly in local areas. It's about that social license to operate.
Right. Okay, what about environmental? Safety must be huge and costly if it goes wrong.
Paramount. And their safety record looks strong. Lost time injury frequency rate, LTIFR, down 84% since FY21 to just 0.1 in FY25.
Impressive reduction.
And it's not just about people's safety, though that's critical. Fewer accidents mean fewer project delays, lower insurance premiums, better morale, direct cost savings.
Makes sense. And resource use. Waste.
They're tackling that too. 24% reduction in waste to landfill, using waste materials like rebar and concrete in construction where possible. Zero liquid discharge from all their factories.
Resource efficiency cutting costs.
Exactly. And water, they've built 24 rainwater harvesting wells, claiming a recharge potential of over 220,000 kiloliters a year, aiming to be water positive. Again, helps with that social license and potentially reduces water costs.
Yeah, and the big one. Carbon footprint. Are they making real dents there?
Significant strides reported. Energy consumption intensity down 33% in FY25. Greenhouse gas emission intensity also down. Switching to cleaner fuels like PNG, using more efficient lighting systems. Practical steps.
Okay. And governance.
Key thing there is supply chain ESG. They hit their target of assessing 100% of key suppliers on ESG criteria back in FY23. They've got a sustainable procurement policy now.
Why does that matter?
Strengthens their whole supply chain. Makes it more resilient, ensures ethical practices down the line, reduces risks associated with dodgy suppliers.
Okay, so ESG seems pretty integrated, not just window dressing.
It appears to be woven into operations with clear links back to business resilience and efficiency.
Right. One last piece we need to cover. There was a note in the financials about a legal matter.
Yes, important to mention. The documents note an ongoing investigation started March 2025 by a government agency. It relates to a specific transmission project.
What happened?
An official from a public sector undertaking and a KEC employee were taken into custody. They were subsequently released on regular bail. A charge sheet has been filed, but the court hasn't officially taken it up yet. Hasn't taken cognizance is the legal term.
Okay. What's KEC saying about it? How serious do they think it is?
They emphasize, first, that it's sub judice, meaning it's still under judicial consideration, so they can't comment extensively.
Understandable.
But they reiterate their commitment to the highest standards of governance, ethics, compliance. And critically, their view is that this case won't have any material impact on the company's operations or its financial results.
So they don't expect it to affect the business significantly?
That's their stated position. And the auditors haven't modified their opinion on the financial statements because of this matter.
Okay, important context to have.
Definitely.
So, wrapping this all up, what's the big picture takeaway for you, the listener? KEC's Q1 FY26 results, they really show a company demonstrating resilience, don't they?
They do. Strategic growth, despite those market challenges, labor, geopolitics.
And that ability to boost profits significantly, cut debt, manage working capital, while pushing into growth areas like renewables and international markets, that's notable.
It is. They're not just ticking over. They seem to be accelerating growth and efficiency, even with headwinds.
It paints a picture of a well-managed ship navigating some choppy waters quite effectively.
Which brings up a final thought, maybe. As the world keeps demanding more infrastructure, especially sustainable infrastructure for the energy transition,
Yeah.
how well-positioned is KEC? With this balance, they're striking leveraging their core T&D strength, but also diversifying into renewables international work.
Could they actually become like a blueprint for resilient, transformative infrastructure development globally, not just delivering quarterly results, but having that long-term impact?
That's a fascinating question to ponder. Can they scale this model globally and truly lead that transition? Food for thought.
Definitely.
Well, we hope this deep dive has given you a clear, compelling picture of where KEC International stands right now.
Hope it was useful.
Thanks for joining us for the deep dive.